go, folks, for a new week. How's everybody doing on a Monday? Big shout out to the chat. Let's get right to it. We are retesting June levels fully. Most of them have been completely retested. Some even were able to take out the lows, Dow Diamonds, S&P 500. Markets are flat. NASDAQ's rolling over right now. And Dow is down. S&P's down 20. Dow is currently down 180. That was not down much just a little bit ago. So another Monday, another week, and probably the two biggest charts, obviously, for stocks is going to be what does NASDAQ do? And we're pretty much slicing straight through all the levels that we would consider. The big level, 11,848. We need to see a single bullish candle somewhere in this area or confirmation. Not there. Definitely not there. I mean, this is where you start to build the argument of something larger unfolding where the buyers aren't going to come in at the lows. Obviously, we're here in October, just entering October next week, and would make a lot of sense for people to panic. No doubt. Not too many setups just quite ready yet. A lot of things we'll look at today. I mean, there's big retests going on, and most of them are failing. That's big. What's going on, David? Swooping Hawk, Miss Stephanie, Ziggy. How's everybody doing today? Just want to let everyone know that I will not be here on Thursday. Had to change some travel arrangements for the big meetup this Saturday in Las Vegas with Mitch Ray and crew. Mitch Ray setting up this whole thing over at Bally's, where he and I are going to do a live joint stream, and should be pretty interesting. I don't know what the exact number is, but there should be a live studio audience, as they say, and then we'll do live stream. Be cool if we could do it broadcast on both channels. I don't know. I'll have to talk to the support about that. Maybe we could broadcast that thing on both channels. This will be Saturday, folks. So we'll get to it. NASDAQ, folks, is still just, I don't even think you consider anything until you can get one bullish day, and that's just not materializing. So if you're looking for, just want to get right to the big argument of whether or not this holds or NASDAQ fails. There's no pattern here on the retest. You're scraping lower levels. And again, under 11,848, you start to have bigger problems. That's the kind of backdrop. It's pretty amazing. We're going to go to Vegas and do it during this time where we're pretty much in the middle of an outright, I wouldn't say crash, but full-on major once-in-a-decade correction, without a doubt. I posted something on Twitter a couple days ago stating that this is the fourth largest decline in the last 50 years. So the last three were 08, 02, and 74. Keep that in mind. We're getting to a point where, like, S&P's down 22%. Those larger market declines of 28 to 39%, okay, those were maximum support. But, hey, if we're going to be like 02 or 08, that means we probably go to about 30% maximum. Keep that in mind. We're deep, we're down, we're getting historic, but we probably still have a little bit more room. And without anything concrete right in front of us on major markets, or continuing to be lackluster day over day, which this is, you have to be very suspect that these lows hold. So the other consideration is just, again, don't ever want to get away from this really simple analysis that we're going to take under these levels. That and I've said this before, said this last week, that there's two arguments. You hold these lows or you retest those lows, but they still kind of are able to hold, and then some new cycle, something new takes shape from down here. Or you're looking at this failing the lows on the retest and becoming the second leg. And the second leg is an AB, CD move, all of that under 8K for NASDAQ. Seems like a ways from where we are, but again, I talked about this last week. I do want to start updating it because I think these are important charts. These are the charts that are, they're doing, talk about once in a decade moves. Where'd it go? Here's the 2-year and 10-year. Okay, 10-year is something at 366. A whole bunch of stuff going on at 366 on the daily, which is something, I don't know, since April we've talked about. I think, was that on the 2-year? No, it's a 10-year on the weekly. Sorry. There you go. Big hop level at 366. It's this bat structure off the low. And we're running up, kind of blowing out the hop level. No confirmation. That's another sign here. You're finally overbought, registering an overbought for the first time in Harmonic Strength Index since you completed that pattern. So again, another situation where this confirmation is telling you going to need more time to get above this zone and see how far we will expand until we do some kind of inflection. Another situation where you don't even touch it till there's one bearish weekly candle. And sometimes knowing the levels and where you are with the pattern levels and a great relative metric like HSI is that if you're looking to short that, and I'm not saying short it, but I'm saying if you're looking for some kind of inflection, you can't even begin one until you have one bearish candle, one counter trend candle, and you're on some kind of crazy expansion here that tells you, no, this is probably 2-3 weeks away from even being able to get out of this overbought situation, and certainly HSI coming back down. So what's that mean? Interest rates and everything that has started, because you could flip this inverse with the market of where the lows were. What was that? Bottomed in early August, and then we've been on a tear. Amazing to think that was, what was that, 255 to, yeah, almost 250, now 383. And that's not even the problem. Here's the problem. The 2-year is the problem. The 2-year is the problem where, again, just connect the harmonic dots, like we said weeks ago, of where could this go, and essentially lining up a 1618. What's that, 470? Yeah, that doesn't seem like a stretch now. Treat this now as a 1618 to 1902 expansion. But I would think you get up to this 480 level, another 0.5%, 50 basis. No, 500. No, not 550. But it's still targeting generally close to 5% or making a run at it. I think that's just probably what a lot of people are thinking right now. Will this go close to 5%? Will it go over 5%? Because there's nothing but air in this 4 level. And that's something that's, everyone sees. And your obvious 2007 peak lines right up back there, same area, 5.5. If we start there off the 2007 peak, and we say, okay, that is, right, that's a shark pattern, as we've said, 886 minimum. What's that, 4.75, 4.8, sure. And you're just halfway there, 2/3 of the way there. So if you're 2/3 of the way there, what's the market going to do? Or what's the likelihood of the market doing anything squeezed? Now this thing's popping. I mean, it's just busted out. The fact that these rate charts have popped, busted out, they're all, they're in literally new decade price discovery. And then you have the dollar indices, and we should probably look at that as well because British pound is almost back at par, and a lot of those dollar pairs are just getting crunched. Dollar index about to run. Let quickly go there because that makes sense. Interest rates and then dollar index, because dollar index was something we talked about on a monthly basis, all long-term levels too. A lot of these patterns and a lot of these charts are weekly and even in a lot of cases monthly levels. We have this on the monthly. We have it's kind of a type 2 crab, okay, without confirmation. And the only place I would look on dollar index, and probably wants to make a steep run at this pretty quickly, is the 886 at 115.40. Everyone's looking at that. I think everybody's looking at that. I think there's a quarterly chart here. We looked at something really long term on this. Let me see here. Yeah. Yeah, okay. I think this was something we looked at a while back where we talked about this crab pattern. It's legit. I mean, it's getting blown out, but hey, if we're at the hop level, we're not touching anything unless we have confirmation. Any confirmation? No, probably all expansion. Let me see what's going on. Why am I not getting HSI? Hold on. Let me change that. I'll have to look at the weekly, or sorry, the quarterly. Why quarterly HSI isn't coming up? Monthly's still the same, and monthly's overbought. So monthly, going back, many years, is still expanding. Amplified, standard RSI, all of those, they're doing maximum runs, maximum expansion. So and when you're there, you're in the extreme. You just look for this thing to be month over month, bar over bar, whatever that primary time frame is. It's super impressive. My guess is that 115.50, 115.40 is the place to target. And you should see this when it exceeds, hits this 886, and that's going back, it's like a 20-year range. Okay, you should see a reaction within 100 or 200 pips maximum. Keep an eye on that. I think a lot of people are gunning for this 120 level. I would really be looking closely at the 886 for what it's going to do. If it explodes, let's say something happens and rates just absolutely skyrocket north, which is a possibility as they run to these levels. Same with dollar index. You could try to make some kind of capitulation run up to here. Been amazing. One or two more. We go to British pound really quick. Couple currency pairs, because there's big things. They're all, this last ditch down is starting to hit major long-term levels. Was that weekly? British pound here? No, this might have been the quarterly. And most of these are going back like 30 years or more. Yeah, here it is. The long-term chart just retesting your 85 lows with no structure. The other one's euro, which is like very surprising. It's not even lower. I would think euro's down at 90 sooner than later. There's your quarterly. Oh, that's back data back tested, back compiled, to get that long-term chart. But even that, look long-term, and do look long-term. 886 levels, 92. Yeah, now you're getting it. Now today, last week or so, starting to really drop. But 91.50, 886. The other one is the yen. And this one is impressive, to say the least, because it did so little for so long. That is the that's the quarterly chart on the yen. So this is something that gives us perspective, folks. How bad is going to get on this interest rate run, explosion, implosion, prices imploding, yields exploding, dollar index doing unthinkable things, and then you get a chart like this. So anybody that knows the framework of harmonic patterns, tell me, where do you think that's going? It's a quarterly chart that bottomed out. It's a real case study. I mean, this is a beautiful example of long-term harmonic case studies, because you would say that's a type 1 chart. It just took the better part of almost 20 years to finish the consolidation before it's going to make the run at 168. So target one, you're 144 yen. Okay, we were talking about this at 136 yen. Okay, 168 is target one. You just can't, that's the target. And now that we have broken out and we're in acceleration phase, either an HSI has to get in our face, or some kind of counter trend signal, rollover, single bearish bar, or this does a quarterly bar over bar march to target one at 168. Target one, long-term metrics. This is where the pattern can act as a really good model for levels, objectives, once you really bust out of the zone. I mean, nothing, now that you've broken out in this regard, nothing's going to get into that until you have some major reversal. You're going with the trend, riding it, playing up to target 168. The other one was it Swiss franc? Let me see here. No. I forget the other one was. Maybe it was Aussie. But these are long-term charts that you're not going to see unless you're fishing around for the monthly or quarterly. Okay, yeah, here's the Aussie. Where's it going? I mean, rolling over, yes, but how low? What are some possible objectives? Okay, 886, or a retest at 886 at 55. So, and that's going back, that's like this century's 886. So keep them, just be mindful that if we're in this extreme phase, which we are, NASDAQ markets are rolling down to new lows for the session here, or NASDAQ looks like it wants to. NASDAQ's flat now. Dow's down. S&P's now down 25. And the Dow's down 230. And I think if we're in the middle of that phase where we're just kind of clipping down several hundred points a day, which we very well could be, this is in that, as I say, serial phase, day, bar over bar, week over week, downtrend acceleration. And with this HSI right here, okay, that just only adds to the additional levels that, at a minimum, the fact that we're rolling over, accelerating, your 6450 now, that essentially the 60 level is the minimum target with 5550. Pretty easy objectives that you're doing some kind of major retest on all these levels. You're there, and you're probably going to keep doing this from now until the end of the year. Yeah, okay, gold. Someone's asking for gold, and yeah, gold's done. Gold's done. It's, I've been saying 1680 80 was the absolute low end, but we see it in all the currencies, and we see this is, there you go, quarterly chart, folks. I think we need to look at these quarterly charts to get perspective of these kind of reversal candles. And listen, we're coming up on the end of the quarter, hence the quarterly charts. These are already in major positions where you're going to finish. You're getting 3-bar candles, not a problem. How about 8-bar? And that kind of a breakdown. There's another BAM scenario for you on gold where draw from the pivot low from 2015. Okay, not even a 50. You're not even at a 50 level, which is 1560, but that would be my first target. 50% retracement, give 50% of this rally, it's gone. But the likelihood of something more, sure, 1200, maybe. Take it in chunks. I think you're there where you cracked it 2 weeks ago, started rolling over, and then took out the lows under 1800, under 1700. You had, I think we had a shark down there. Let me pull up the daily. No, we had a bat, and look how ugly that bat was. Failing the hop at 1707, yeah. Under 1680. And that's probably just triggered in the last week where the acceleration down to the 1500 handle. Forget 1640. I would expect this to be under 1600 pretty soon, or even, yeah, oh yeah, there is this back here, 1612. Little hop level from all the way back from 2021. Yeah, and then let's see if it fails that, then it's done. There's really not much under this. Where we are currently, 1680, 1700 really was it. Under 1600, the whole thing's done. And I mean major reset. Dow down 250, NASDAQ dropping like a rock. I think we're just going to have to get prepared to see things that are quite surprising. A second leg of bear markets are just nasty. They're kind of like the dirty side of a hurricane. So let's get in really quick to the two that failed. I want to get over to S&P 500 because, again, I think that fails here. It's probably got the biggest gap to shoot. You already took out the 50 level. Let me bring this up. Going back to the COVID lows, which is everything we're talking about here. Everything is for the major markets. The secondary leg of what we're talking about is that if we take out June lows, what you're essentially then just targeting is the 886. 886 of the COVID low, which is something we theorized a year ago, and now it looks like, hey, we want to make an attempt. We want to try to get down there. And that's the BAM effect, the bat action magnet move we talked about for a while. I mean, last week we talked about it in 2 sessions. Here's your weekly. There you go. So all it would take is one. You almost got down there last week. I'll get into what that was. You actually were just pausing at the 886 so far, but your close underneath, of course, June low at 361. Anything under 360, it just then flushes down. You could consider that the BAM trigger point. So that's your B point for this. And a close under that level, the only thing left is the 886, because it would be the A to B move, and then C to D comes back down. You know, all of your approximated harmonic targets, they're based off of this COVID rally. The COVID leg up, fits right real nice with that B point and the larger structures taking shape quickly. That's why I think it's here we are. We were negative in the pre-market. They rallied it back. You're negative again. Okay, that is just you're gonna do it this week and really make a run at this prior low. I know there's news items and a whole bunch of things coming up this week. You got earnings, big earnings coming up in a few weeks. So let's see. But it's more about interest rates and more about what the bond market is doing, where they're just selling the stocks. They're just selling the indices. Interest rates go up, that 2-year goes up. They're just going to keep selling this thing. That's why I don't normally do that. I don't normally want to kind of combine the two, but because this thing is, here's your 2-year yield, and let me just remove so we can see it. Just take all the lines off. That thing is not only I wouldn't even say that's spiking yet. I mean, that's just like a super strong move, very strong breakout move. Anybody that would just study standard technical analysis of prior pivot points as support and resistance would say that kind of resistance and that action at that resistance point was just a mere pause before something much larger. And you look left on these interest rates, you're already back, like I said, to decade plus levels where rates love to be static. And so that does not stop until you have some kind of major test, which is half a point higher minimum, and then you're just see what goes on there. But you're clearly you've taken on the character of a 1618 extreme breakout. Not to mention, this kind of move is steep, went through the prior resistance and just continues right through. Tell me that's not going to go straight to a 1618 just by definition. I think anyone who's spent more than 5 minutes looking at harmonic patterns would say, yeah, that's a sharp move. That's an extreme harmonic impulse move where likelihood of, again, just to define what's the top end possibility, 2%, or let's use our favored 1902. That's like 580, 575. So until that stuff gets hit, market will continue to go lower. That's what's going on, and that's the macro. And so the macro over to crypto, which is why crypto's not doing anything. I think Bitcoin is an absolute miracle. It's still holding at the 20,000, 19,000 level. Anything going on here? Nope. Not much really happening since this last HSI. You're squeezed between that, which is 19.5, and then the other signal around 25. And at this point with Bitcoin, until that thing broke out and spent a couple months sideways building, I wouldn't be looking for that for positions. And it hasn't done anything for the last 6 months. It's a little bit different than Ethereum. I still say Ethereum with the breakdown at 1500 has to go and do the BAM. Talked about that last week. Has to go back, go to the daily chart, come back and retest. Here it is. There's the weekly pattern, and that XA level is 1280. So it explains why it's at least pausing here, but you're doing the pattern inside a pattern deal. And you're seeing that in a few different pairs. That's what I want to see with Ethereum. You've got your X, you've got your A, there goes the B, there goes the C, sets up the B point for the breakdown. Okay, from, what was that, 1430 breakdown, shoot it to the 886. Yeah, it's like 1030. You'd have a bat on the retest, bigger pattern, smaller pattern. Okay, that's why the 1500 level was so critical, bumping stops and being prepared for this thing to do more consolidation, something like that. But that's the definition of the BAM move. Looks like that. Then shoot it down to the 886. Yep. So that's the Ethereum situation. I wouldn't be looking for anything in Ethereum until that was eventually realized with just a confirmation across the board, which is likely why and will be determined by the major markets. What are the major markets going to do? Now Dow's down 312, and yeah, look at NASDAQ dropping like a rock, minus 70. So stay on that. What's going on, everybody? A couple questions, sure. B. Lawrence says a BAM move. Okay, B. Here's where you learn about that. So everyone, go to harmonictrader.com and register to become a basic member. Then go to the basic members page. B is asking, what does a BAM mean? It means bat action magnet move. All of the strategies, everything that I talk about is available for a download, each book that goes through all the concepts. I would say volume 3 probably has all of the advanced concepts. Volume 2 is really a solid primer on pattern confirmation and the BAM, bat action magnet move principles. And then volume 1 is all patterns. Harmonic Trader is like basic measurements. And click those and download them and go through those books. Also, this is all free. Get with the software because everyone should be working at a minimum with TradingView. A lot of people are now starting to get with MetaTrader and TradingView with the multiple windows. But TradingView at a minimum because we do a lot of our work on that platform and that has everything. But the BAM scenario is lining up our levels. Okay, when patterns are taking formation, to not only use that as an identifier of, okay, what's the potential long opportunity, but how low is this going to go? You know, it's already broken down. You've formed 4 of the 5 points. Okay, it's pretty much a structural question at this point. Until it gets down to that level, I'm not interested. And then Bitcoin's the same thing. I mean, Bitcoin has done nothing. Give me a reason to go into Bitcoin. Give me a technical reason. Any trigger, any reversal? No. I mean, it's just, whew. It's the antithesis of 52 weeks ago. The environment and everything that's happening is pretty much the antithesis and moving in the other direction. One or two interesting scenarios with crypto, of course, XRP. All right, but don't be fooled. All right, this is a one-off. And here we go with another small bearish pattern on the daily. That's a daily. Okay, and that triggered at 55. And I would look for just, hey, if you're on XRP, again, a lot of people are. A lot of people are long-term holders. I wish you all the luck. This is just a short-term reaction idea. Okay, what that move in XRP was just a big 1618 impulse off the low, and now come back, retest 45 or, you know, between 39 and 45, preferably down to 39, and then trigger another HSI to head back up. And look at HSI as, you know, you just triggered a bearish reading. So that pretty much confirms, and that's one of the signals I wanted to talk about today with HSI, that is one of the basic ways we're going to shut the door on looking at anything but what that pattern is suggesting. Bearish pattern, bearish HSI, bearish candles, you're done. And looking for the reaction back down. If you were super bullish on XRP, great, but just at the right price. For us, it would be after this reaction. So this thing has suffered for a long time. Maybe that's the first move. I don't know. But there's a lot of things that have been difficult with the recent crypto moves. They've been super reactive. They've lacked confirmation in the ideal scenarios that we like to feature. Those can be tough, but with these kind of real quick moves, it's, when you move from 30 to 55 cents in a very short period of time, it's not sustainable. Just on the price movement alone. Keep that in mind. And I would not be surprised to see if XRP came all the way back down. We do have a massive pattern, and this is something I've featured before on XRP. Okay, massive bat pattern. The XA level, this 886, right at 32 cents. So that's really the larger scenario of what's happening here. Keep an eye on that one. It's not CAM, Jeffrey. It's BAM. Bat Action Magnet Move. It's in volume 2, please. People that have questions on volume 2, again, go to basic members and click on the link. And then it's in the book right here, volume 2. So I try to just show you the quick. Yeah. Oh, it's all the way down here. There you go. That's a BAM. Yeah, it's towards the back. What page is it? Chapter 5. But there's the BAM idea. There you go. That's in volume 2, folks, chapter 5. But that shows you the concept. It's taking an M formation when you can identify 4 of the 5 points. Bat action magnet move. It relates to the bat pattern. Keep an eye on that one. Just keep an eye on XRP. Again, wouldn't be surprised to see that thing come back at least to 39 cents where you are. Plenty of time. With this macro doing what it's doing, I don't expect it's going to change anytime soon. Someone's asking for Solana. I wanted to go to BNB first. BNB is still all about this 256 level on the daily chart. Take a look. And it looks like we're going to roll back down on BNB. And this is still, okay, we had the bat pattern we talked about for the last few weeks. Can't get above it. We haven't, did we hit the 56? 56.73, and the target one was 56.60. Really close. I usually want these to hit, but it's not busting out. And you have the weight of a bearish pattern against you. So, I would prefer to see an HSI down in here before I would assume that does the return phase. And this BNB looks like it's just going to continue to roll down. Keep an eye on that. Martin's asking, can I send out volume 2 for the pro members? Well, everyone signs up as a basic member, and that's free. And then if you have gold or silver membership, you can still access the basic page. Again, just go to Harmonic Trader really quick. Here's the question. Just sign up. If you're not a basic member, just sign up as a basic member right there. And then that'll take you, go to the basic members page. That's all free, and the free trials too, folks. Please be aware that that basic membership is free, all the videos, everything. And go to the Discord as well. If you have questions, reach out to Miss Stephanie. She'll help you. But just hit that link and then go over and log in. But for everyone that's still hyper focused on crypto, you want to be looking at Binance Coin. And if we don't do something quick, we don't break out, or probably even more telling, under 256, the larger crypto market is going to start to roll over. The crab action magnet move, same principle. It's the same as the bat, just different measurements. Someone's saying crab action magnet move. Yeah, Dow's down 325. Yep. Let's go over to S&P really quick, folks, because it's the SPY's down. Is that new lows? Almost. Yeah, here's a nice 1 minute chart on the SPY, and look how this fails. It just completed about an hour ago, and another failure intraday. Look, not a bad idea right there on the initial test at 11:30, around 365. But look what happens. Go sideways for how many bars? 10, 15, 20, 25. There's 30. And you register a bearish HSI in a bullish zone. Those are signs of weakness. And then look at what this thing is, just continues to break down. Let's go to the futures. NASDAQ futures. Yeah, already there. Okay. Let's go to, go to the 30-minute. Yeah, these are the lows. These are the lows. The lows. There's last week's lows, the lows for the entire move since August. And we just have a quick thrust up and we're rolling back down. Those lows, everyone should know that these lows right now at 11,230 for NASDAQ match up exactly with the 886 from June. So here it is. This is what happened on Friday. There's the June low up to the August peak. Your 886, 11,372. Yeah, I think that might be a little bit off. It might be a touch lower. 11,372. I thought it was 290. Doesn't matter. You're at the 886 right now. Almost closed below it on Friday. You're already below it now. And any close below the Friday last week's close is just more continuation. It happens now. Nothing here on the daily chart that links up for confirmation with HSI. Amplified RSI still in the overbought, or sorry, oversold, going lower. HSI, nothing. Standard RSI, which is a big deal that it's at the 30, okay, needs to hit and reverse all in the next 3 days. If it's going to do that, if it's going to do a quick pivot move, you would see that then by Wednesday. But you're hitting that today, 30 level. First time, that's got to be a long time. Yeah, since January. All the way back there, last time you were officially oversold on RSI. But the signal I want to go off of with all the markets is HSI. And that's nowhere to be found on these daily charts. Go to the, really quick, the diamonds. The diamonds have, I'm going to go to, let's go to the TradingView platform. So diamonds have a couple of big patterns we've been retesting. ABCD pattern. I think there's a weekly. Yeah, okay, here's the weekly diamonds chart. Beautiful bat pattern, type 1. We've come back for a type 2. Now here's the deal. On the weekly, you're already below the initial type 1 low. There's type 1 reaction, come back, all the way back down. So what are we looking for here? I need HSI, which can go as low as that hop, which is 278. You're 293 at the moment, and still be okay. HSI, at least it's coming down in the new week. Last week it was still at the 50 line. But that's what you want to see. And again, that's probably this week to as low as, let's call it 280. On the weekly, amplified RSI, let me blow this up. That's hitting now. So again, this could be the week where we come into the zone and then maybe pivot out next week. But at what price? And I think for the diamonds, there you go. You're probably, you go down to this 20 to 278. That's 27,800. That's at least another 1,000, 1,200 on the index from where you are. But I think that could happen this week. Get one more big candle down. I mean, you're last 3 weeks, 1, 2, 3. This is our third week. Last 5 weeks, down 5 now out of 6 into the zone on the retest. And it fits perfectly within the 1-2. Fits in perfectly within the 1-2. David saying, yeah, it must flush 29.3. I thought, I agree. 29. I was really thinking 30,000 was should have held. And I would think then there's only two possibilities, much like NASDAQ, that if you have this bad pattern and it's been holding for the last many weeks since June, okay, and it's reaction, beautiful, type 2 return on its way, could go as low as the hop, okay, but you still need HSI to come down. And all of that would fit within the reversal framework. If there is an opportunity, it's probably down here though. It's still probably 5-6% lower from immediate levels. But you want to get all doomsday and gloomy. Here's the COVID relative move. And this is nothing, this has barely been touched in comparison to, you look at NASDAQ or other markets, which have basically given the whole COVID thing back. But it's, it gets to become something like this. Maybe it's something like, as your worst case scenario, that's 20K. All right. So, and I think I don't want to just say, oh, we're dropping to 20K. No, I just want to outline what's the big scenario, what's the small scenario. For the Dow, I think under that 280, 28,000, 27,800, it then moves into the bigger scenario. I mean, this is an alternate pattern, yes. You could say there is kind of a B point failure that has already registered, and then you favor it down to the 886. In some ways, it makes sense that the Dow is lagging behind techs, but the structure, the BAM phenomenon, still the same. Doesn't change. But let's just stick with the immediate scenario, which is what's it doing at these lows and how bad? Yeah, it's 20K. I mean, your nasty scenario on the Dow is 20K. I don't want to, I'm not saying it's going to 20K. I just want you to have a short-term scenario and a longer-term scenario. So we know that, okay, if we're going to fail the June lows, where do they officially fail? And if that fails, what does that mean? So plenty of time, like anyone looking for investment opportunities at these levels? Should we be putting money into 401ks or 529s. I mean, I've told you folks, what was it, 5 months ago, 6 months ago, that I pulled my son's 529 because I thought it was that bad. And I did, and it's been sitting in cash. And I probably won't move that back in till next year. And then other cash in 401k and other cash sideline money. Where are the opportunities? Because you did things like when you did the FedEx thing. I mean, let's really quick. Here's the again another. I'm not trying to spook people, but this is the BAM scenario on the weekly charts going back, all the way back to COVID. There's the COVID low. $50 level, shoot the gap, 886. And that's what FedEx is doing. That's why this breakdown from the 50 level, once it cracked, was so nasty. That's 113. Okay, you're still 144. That was a $300 stock a year ago. I think it's interesting. You have some patterns, this deep crab pattern from way back when, but doesn't excuse what's going on in this current segment that would shoot the gap. And that's that's the scenario that all of them are getting challenged with, all markets. Are we going to go back and form the BAM breakdown and then just go to the 886 to do the final leg? Check it out. Go to, again, this stuff has been repeating. I really talked about this. This is probably 15 years ago or more that I put this to pen, or put this to paper, as they say. But the whole concept of recognizing when that happens, let me go back to it. A big part of looking at M&W formations. If you can outline 4 of the 5 as it's taking shape, yeah, it acts like a magnet effect. And let's go to the bearish side here. There you go. So here's the bearish breakdown because you're forming the bullish pattern, and you shoot the B point breakdown to the 886. It's like that. And here's a great chart. Okay. Let me increase the size. That's a weekly chart of, I think that's the SPY. No, that's on the euro. Amazing. That's a euro chart weekly, 2005. Okay, beautiful bat structure. B point right there on the 50 level. Once it broke down, it shot that into the 886. That's what a lot of the currency moves that we looked at today are doing on their long-term levels against weekly, monthly, quarterly. And that's where they have to go. So until a lot of these relative markets get into that kind of position where they do the full retest, we're still in the thick of this. Worst case scenario, David says, is 27,000. Maybe. But what if something happens and, this is not, again, always good to have the crazy scenario in the back of your mind. Think about the 2016 election. No one was expecting, everyone wasn't surprised. Everyone was, when they saw that 2016 market crash 1,000 points overnight, everyone thought, that makes sense. But then when it rallied 2,000 points, that's the kind of thing I think you're setting up for. If you set up for a collapse or a crash, or if rates spike, let's say something happens and 2-year rates spike well above 5%, we're looking at 4.8. That would be a scenario that would put the pressure on it now. And again, it's a different market where you are going to need more time to resolve this because we're already, this is the 4th worst decline in 50 years. So does that end tomorrow? Probably not. Will it show us signs eventually? But again, I think you're getting squeezed now. We're October, end of the quarter. coming into the end of the quarter, by the end of the week, and then everything moves into the last quarter of the year. And it just where the markets are, they want to test lower levels. That sounds like a lot of tax loss selling to me. The further we get along. One or two more. Let's look at crude oil. Crude oil is going to keep going lower. And ever since that failure at around 90, we did this. Here's the shark. Take a look. Where'd that go? Sorry, one second. Ever since, the shark failure at 84.50, it's probably really the place that it's, failed the hop level. Now 77, you have to kick this out to the all-time weekly, monthly retracement. Let's go monthly. And you have to look at the 382, which I think is 65. It's been a while, but again, not that 50. No, it's like this. 382, and that's probably a minimum. 64 and change, 64.70. 13 lower from current levels. That's where you're going. You're not going to stop it. And nat gas, which has been remarkable, 6 on the downside, 9 on the top side, did it again. So rolled over at 9 and back at 6. And let's look for this. I'm not dismissing nat gas. I'm not saying it's over yet. Here's another BAM scenario that we talked about in the last few weeks of looked like it was going to try to break out above 10, but couldn't muster it, rolled over, and then again, here's your BAM breakdown. All right there. And shoot the gap. 573, 575. Let me get that right. Looks like that. 586. Let's be exact, especially with nat gas. And maybe we'll get another shot. We've had a few, right? We've had a few. It's just that even this most recent one with vehicles like UNG, we talked about this in the last couple of weeks, why we thought that 3071 area was a sell. And it was. And this is type 2. So this was a 3 ideas that I posted on the site about a month ago. Your 2384, look, by definition, it is a type 2. So maybe as low as 18 bucks. 1798 is target 2. That's what we look for on the retest. This is the first reaction down to target 1. Came back, gave us the second opportunity. Now down to target 2. Hey, Dave. Dave says he loves the software and how it does all the things automatically. Appreciate that. He says he's too lazy to do the measurement. I don't think it's, look, we've got such technology now that if you guys came this far to read the material, get on the site, and you're here to learn about the levels, okay? It's the software is the advantage. And so you just have to get a little accustomed to the levels. Let me walk through, and that's what we do here with all the markets, all the different time frames. But pretty clear, and we're look, not every setup's going to give you an actionable opportunity. We let a lot of them go, but we're looking for those that have everything that we want. Confirmation, pattern. We recognize it's the first time or the second time, reaction, reversal scenarios. That's key. Now, on the flip side, I want to go back and highlight a couple of the big name stocks that we still have to look at after every day, which is Microsoft, because here we are on the retest of a type 2 of a big, deep crab. Okay, how low is this going to go? Are we going to the hop at 221? Do we have confirmation? No. But we have hit this 241 level where our whole window is like that, down into that area. I need confirmation. Here's HSI, still oversold, but trying to come up. It's probably 2 days away. Even some kind of counter trend, whatever, for Microsoft to at least to get something in this market. If this market's going to stop going down, you need to stop Microsoft from dropping. The other one is Apple. And we're, 151. Okay, looking for another deep crab from June. Okay, another deep crab in this case, 131, 131.86. And the thing to look out for on Apple this week, if the market starts rolling over and Apple's trading under 149, under 148, that's where we shoot this gap. Shoot it maybe first 140 something, 143, and then get the retest. If you could have Microsoft and Apple retesting these patterns and then give you confirmation, and it's probably 2 weeks away, but you get some kind of scenario, all right, then I would say maybe the market's trying to give us some kind of bottom, but it's lower. It's not where it is right now. And here's Apple HSI. Tell me what it's doing. Right there. No pattern up here. A nominal reaction off the low, hit the 50, we're rolling back down. And all three of them, this matters too. Amplified RSI is under your 50 in a clear downtrend. HSI still downtrend. Standard RSI, I mean, there's the 50 line. Sorry, there's your 50 line right there. And you keep downtrending under 50. When that takes shape, you eventually need to hit the oversold to finish the move. So that's still lower. I mean, that's why this stuff points. It's in a bad. It's like April, and April was just in a bad spot. Okay, good one. Cactus Leo, what's up? Thanks, Cactus. Cactus Leo is saying, look at VIX. And I agree. And VIX, we have patterns on VIX, but they're higher. 32. Okay. Had this Gartley here at 3270, 3272. That's been some stiff resistance, but I think you really want to look. If you're looking for this to end, you need extreme readings. You need you need a 40 reading on volatility easily. You need something to happen where you spike up to hit a 40 VIX. And then you could say that was the extreme move. But until then, no. If anything, just this thing's been firm all year. What was the daily? Oh, I know what it was here. Go to the TradingView platform. Here's the VIX chart we looked at last week. And this had a daily, I'm pretty sure it had a daily shark up there. Oh, here you go, bat pattern. Oh, good one. All right. So back to back. Never did that do the type 2? No. 2264. Really close. Right now we have a bearish bat, amazingly. Hitting the hop level today, 3179. Okay, let's keep an eye on it. Let's definitely keep an eye on this because we would still want to see this do a 1-2. So maybe get a respite in VIX and then take off after the type 2. There's your 40 level, something like that. HSI, no, not there yet. This has yet to confirm. And interestingly, Amplified is expanding today. So yes, the VIX can still go higher. Sure. HSI needs to come up. So for the week, can this still move? Absolutely. I mean, nothing says last week finished off what needed to happen. That's where we are. I mean, it just, I think you get the implosion of energy, and energy can come back. Energy collapses to that 65 level. That's going to help the market. Here's the shark. Okay, the final thing I want to say about volatility. We brought up this shark pattern from 2022, beginning of the year, when it had that spike up to 39. It did give us a shark pattern larger. And so do keep in mind that that still has to be retested. As high as the hop, that's 40.79. So something crazy happens. We see a 41 VIX, 43 VIX. That would be close. That would get us close. But probably later this week with the announcements and then news coming up, earnings announcements coming up, that's how you get this next leg. Well, that's what I have for today, folks. Listen, I'm going to wrap it up. Tomorrow, we'll do another long session. Thursday, I'll be out. Saturday, again, the live stream in Vegas with Mitch is going to start, I think, 5 o'clock Eastern. I'll get more details on that. I'll share it with everybody tomorrow, and we'll see if we can do a joint live stream. Do it on both channels. Shouldn't be a problem. Until then, guys, folks, have a great one. Go get them, and we'll see you tomorrow at noon.